Welcome to Real Estate U with Lettiann.
Welcome back, Conrad Miller from the Miller Law Firm. Conrad was with us in one of our previous seasons talking about how to bounce back after bankruptcy. Conrad with Miller Law Firm, of course, a locally owned Kansas City metropolitan business, which we love supporting local. We are going to talk about 1031 exchanges today, right, Conrad?
That's allegedly what we're going to be talking about today.
We are.
Yes.
It's becoming more and more popular. People are asking more and more questions about 1031 exchanges. But let me ask you this. How long have you been an attorney?
About 35 years.
Okay, right.
Yeah,
so we know who we're talking to, right, folks? So what is a 1031 exchange?
Well, basically, a 1031 exchange, and 1031 is actually the IRS section. So that's what it refers to. And what it allows you to do is if I own a commercial property and I sell it, I can basically exchange it for another property and defer the capital gains. So
sounds so simple.
Yeah, it is. It's very simple. So do you want to talk about anything else?
All right.
It's so simple. That's all.
No,
We'll be right.
I'm just kidding.
No, there are some more details to it. You might ask, but yes, there are some more details to it. But capital gain, just real quick, is if I sell a piece of property for $100,000 and I bought it for $50,000. Then they tax that $50,000 for
the remainder.
The remainder. So I would have to pay, let's say, $15,000 in taxes on that capital gain. I think whatever it is this week, they change all the time. But just for illustration, I'd have to pay $15,000. So I sell that property. I write it. I get my $50,000. And I write a check to Uncle Sam for $15,000. It's we're taping this on tax day, so it's very timely. Very timely here. But that's what happens. So what Section 1031 does is it allows you to take that gain,
the $50,000,
the $50,000, and invest it into another property, and avoid the taxes. To delay the taxes is basically.
Question. Can it be, you said commercial, but can it be commercial or residential?
It has to, that's a very good question. And it has to be, that's a very good question. Hope I have a very good answer. Yeah. It has to be an investment property.
Okay. Oh, good.
So it's got to be something that, it's not for a homeowner. For instance, I can't sell my house. There's other provisions of the IRS that deal with that.
So a rental property or...
rental property.
Would a flip and then a sell?
A flip, no.
Okay.
No, flippers do not. You have to actually have held it for, I think, 2 years.
Okay, minimum of 2 years.
Yeah, 1 to 2 years, depending on the property. And again, there's lots of... The thing about 1031s is there's lots and lots of little details and little, rabbit holes you can run down. And so, the concept is pretty easy. It's you start getting into the details, like I say, the devil's in the details. You just want to make sure that if you're going to do it, you do it right and make sure that everything is set up right. So basically it's investment properties, and it's like, they call it, under quotes, like kind properties. Mm-hmm. So let's say I have, 20 rental houses, and I sell those, and I can put it into other real estate. Okay, so I could buy a strip center. I could take the money I made from that, and buy a strip center. And it also has for businesses and, personal property if I sell, but it's got to be the same kind of property.
So you can't sell a commercial building and then invest the remainder in a rental
in some kind of personal property.
Oh,
so
just not personal.
I can't go out and buy gold with it or something. So I guess I could, but it's not tax deferred. So, it's got to be the same kind of property.
You can go use the remainder and buy your second home in Estes Park.
Yes, I could, but I would have to pay taxes on that.
Oh, right. So you could do it, but the part of the exchange part is investment for investment.
Investment for investment. Now, and that brings up a good point, and this is one of those things that if you are thinking about doing that, that's something you could consult somebody who really knows what they're doing about that. And it's always, I'm by no means an expert on this. I've dealt with them for, this is an old section. This has been around for 100 years. But
it seems like it's becoming more and more prevalent. People are becoming more and more aware of it.
Yeah.
They're being told about it.
Yeah.
I know we've had several deals like that coming through our office where people have even extra money to spend even after they purchase something. They have like 10 grand left and they buy a small property and rent it.
Yeah, and you can do that, but so for instance, if I have a rental house here and I want to sell that rental house and buy a rental house in Estes Park or Winter Park or whatever, that's a like kind, and I think I would say that you could do that, just as long as it's the same type of property.
Who gives you the yay or nay?
Well, that you have to. Basically, what you do is you would go to a what they call a qualified intermediary, and what happens in this, obviously, the idea is well, I'm going to take this property and I'm going to exchange it for another. Well, yeah, it's easy, But what they don't let you do is they don't let you sell your property, get your money, and then buy something. The idea is that it's going to go to this qualified, what they call a qualified intermediary.
Kind of like an escrow account somewhere.
And you're going to have an escrow agent also.
Okay.
So the money goes into the escrow account. And then the qualified intermediary actually gets the property. You can never get the money. Never touches your hands. It goes to the escrow account. And so you would do the qualified intermediary. And then they hold the property. They hold the money. They find the additional property. And then it all goes through that intermediary. So there's never any money that's touched by the individual, and which is the whole idea, is that if you touch it,
you're done,
or you mess it up, then you're going to owe the taxes.
Gotcha.
So that's why you have to, people ask me about it, and I can explain it and tell them, well, this is what we're going to do, and I've got a pretty good idea of what to do, but they say, would you do that, Conrad? Oh no. I'm not going to be a qualified intermediary because there's so many, it's the IRS.
And there's lots
and there's all
small text.
Brad
Sure.
Barker.
Sure.
Brad's got
love Brad Barker.
Yeah, Brad, Career Education Systems, another
Kansas
locally
City.
owned, another locally owned driver. But yeah, he does on that, and he's got a book literally that is 4 inches thick.
Just on 1031.
Just on 1031 exchanges. Mm-hmm. So if you don't do them all the time.
Well, that's a good point. So if you actually want to know more, like if you're like, maybe there's other real estate professionals watching and they want to know more about 1031 exchanges, you can take a class at Career Education Systems, maybe even online or in the classroom. So go to Career Education Systems. I think it's kc.com. But anyway, Google it and you likely know Brad and all those great folks as well. But just jump in on the class, and I'm definitely doing it as well.
Yeah, it is good, and it will explain the basics to you, which is what I'm basically doing here is.
So I had a question too. So there's no simultaneous closings. So I know we keep talking about Estes Park and Winter Park because Conrad's brain is in Colorado right now, even though we're right here in Kansas City. But there's not a simultaneous close, because sometimes there's a simultaneous close if you're to transfer the money.
And that's why the 1031. That's why the section came up, and that's why they have all the rules, because. To do a simultaneous close, I've got this property now, I've identified it, and I'm going to sell it. That is really hard.
Yeah, it sounds like it would be.
So that's why they have certain days. There's certain time frames.
Right. I'm remembering this now. Once you have the money in that account, which you're not touching, it's not your bank account, you have like 45 days or something to find a property to secure.
It's 45 days.
Whoa, I can't believe I
to find
remember
that.
that.
Listen to that.
Whoa.
Who's the expert here?
All right,
I don't
move
know.
over, Conrad.
Yeah.
Well, I
No,
am
you
a
do
real
have-
estate professional,
Yeah.
and if you're a full-time real estate professional, you need to know your beep stuff.
Yeah, especially on this stuff because
Right.
you have 45 days to identify a property.
And what if it goes past that? Like, do you like your host?
Yeah,
Like you have
you're
to
out.
pay.
You
Gotta
pay.
pay.
You pay.
Right.
Yeah.
I mean, that's pay tax, capital gains tax on the your whatever. your
capital gains.
Yeah. Right.
So you basically what happens is I'm selling my property here. I've got 45 days to identify the property. Okay, to say okay, and you can identify up to 3 properties. So if I have, say I have $100,000, and I identify 3 properties I want to use $33,000 a piece on, I can get 3 properties. So you can have multiple properties, but you have to identify them within that 40.
With an address? Or
Well, basically, this is the properties we want to do.
do you have to secure them? Because
no, you just have to identify them.
Because this market is crazy right now.
Yeah, you just have to identify them, and then you have 6 months, 180 days from the date of sale. We sell our property. Mm-hmm. I've got 45 days from that date to identify a property.
Gotcha.
Okay, and then I got 6 months from that day to actually close.
Okay.
And there's no, 181. It's pretty. You got to close. So if you're going to do these, and this is where, a real estate professional can help, is if you're going to do these, you got to identify that property. So you don't need to be doing it on day 44. If you're selling a property, you want to do the 1031 exchange. You usually have 30 days before you close on your property for due diligence and et cetera, you better be looking.
You cannot dilly-dally.
You don't dilly-dally around because, it goes quick. So if you can identify those, the sooner you identify the properties, the better. And then, make sure that you can close in that, 6 months from the date of the sale.
And it doesn't have to be in the same city or state,
no.
or maybe even country. I don't know. Maybe the country. Let's stay with the U.S. because
I'm sticking with the U.S.
But you can sell a property in Kansas City, and let's say you want to buy a second home and rent it out in California. You could use the
as long as it's the same. If I'm selling a rental, investment for investment,
or commercial. Does it commercial? Can you do commercial to investment?
I think commercial to residential for rental purposes, yeah.
Okay.
And the like kind is pretty loosely interpreted.
Okay.
But you can, you can do that, and a lot of people do that, and so that lets you get into that property within that 6 months. You can close, and then you've got your investment property.
Does the title company assist or secure the intermediary?
I
think they would maybe have names of people.
Title companies can be. I think title companies can be escrow agents.
Right.
The escrow company, but they're usually not the qualified intermediary. There are companies set up specifically to be qualified intermediaries, and and the cost on this is really, inexpensive. You could.
You mean the fees and whatnot?
The fees. You're talking about maybe $1,500
compared to if you had to
pay a $15,000
Uncle
tax.
Sam. Yeah. Right.
And so they do it all the time. They've got the agreements. They've got everything all set up. So, but you got to find that it can't be. I've had people come to me and say, "Hey, I need you to be my qualified intermediary." I go, "I'm your attorney." And I can't have, your qualified intermediary has to be an uninterested third party.
Oh.
So, because they're just the conduit. They get the title, and then it goes
That's kind
to
of weird.
them.
It's weird.
And they buy the property for you. I mean, so they're not your agent. You don't have to be a real estate agent to do this.
You better trust that person, or they'll keep that piece of property they just bought for you.
That's why you go with a company that has $1 billion. I mean, there's companies out there. There's lots of companies.
No, this is good advice.
Yeah.
So don't just trust your brother Joe's friend.
No, and then they wouldn't be a qualified mediator.
You can't just pick someone.
Yeah, you go to somebody. There's companies, like I say, that actually do this. That's all they do.
It's not like you're picking a godfather.
No,
you got to find them.
You got to find them, and good, bonded. I mean, the ones I recommend.
You sure you're bonded? Okay.
Like
who do you recommend?
Literally billion dollars. I think it's Starker. It's
Starkers, wasn't that on the Plaza years ago?
Plaza. That was, yes. Excuse me, I'm having a flashback.
You met somebody at Starkers on the
Starkers,
Plaza?
yeah, that was my intermediary. I think, but I'd have to look. I'd have to look it up to see who it was. But I've got their card in my little BNI book.
Yeah,
way back.
That's
when.
where we met.
Yeah,
20 years ago.
Way back when.
So who wouldn't qualify? Is there like persons or certain situations who may not qualify, or everyone could probably?
If it's an investment, it doesn't deal with a person. It deals with the property. Okay. Now, if I own the property, and I think there are some provisions that if I own the property personally, if I own the property as an LLC, generally the general rule is it's got to be owned by the same person. So I own the property A, we go through the process, property B, C, D, I've got to own it. Now there are some provisions, and again, this is one of those things that you need to, look up and make sure, but I possibly could go from, Conrad Miller personal to Conrad Miller LLC and qualify.
Because it's the same person.
It's the same person, same member.
Not a different, same member, not a different company.
And same taxing entity. Gotcha. I think that's the big deal.
Because an LLC is all together.
Yeah, and an LLC basically flows through to the person. Mm-hmm. It's just an asset protection thing. So I think there's that, and this is kind of one of those areas that's kind of changed over the past few years. When this first came out, I mean, it
was like 100 years ago, wasn't
corporations, that was it. Oh. That's all you had. You didn't have LLCs and limited partnerships and all these other things. But that, those types of things are where you have to go to that. You call, I think it's numbers like 1-800.
Let's not just spout it out, just in case.
1031. I think it's one of those tricky numbers. It's like 1031.
I'm going to call that number.
Yeah.
Well, we just have a couple minutes left. I'm being told by Andy. So just maybe a recap or the beauty. This is a beautiful thing.
Yeah. Well, basically, what it does, it gives you tax-free investment money. So if I do that,
tax-free investment money. I love some tax-free investment money.
So let's see, I make a $50,000 capital gain. I can put that extra $15,000 in there, and it grows without any with the property.
How many times can you do it? Do you know that?
Until you die.
So you could sell, buy, 1031 exchange, maybe wait a few years, sell,
2 years,
buy.
sell, buy.
Oh, minimum 2 years, right? So to infinity until you die.
And here's the great thing.
So you can't just do it one time.
You can defer those. It defers those taxes, and you get the benefit of the growth of that, and not only the asset, but just think, if you do it, if it doubles every 10 years, 20 years, you've gone from 15 to 60, to 15 to 30 to 60, you got $60,000. And the good thing is you can do that until you die, and when you die, the beautiful thing is
when you die,
is a step up in basis, and you never pay the taxes.
Whoa!
So if you can outlast it,
and then you pass it on to your heirs.
Yeah. So
and you never pay the taxes.
You would never pay the taxes because of they call it a step up in basis from your properties. upon death.
Conrad Miller is a wealth of information. And again, Miller Law Firm right here in the Kansas City metropolitan area. If you like what you're seeing here, please subscribe to our YouTube channel, Lettiann and Associates Real Estate Services. All of our podcast episodes will air every Thursday at 6 p.m. And they're a wealth of information and value to you, the consumer. That's the point of our show, as well as supporting locally owned businesses. I'm all for locally owned business. And if you have any questions for Conrad, we have his email address here on the screen for you, as well as his phone number. I'm sure he'd be happy to answer any of your questions. And Conrad, thank you so much.
Okay. Well, I appreciate the time.
Great seeing you again.
Yeah, nice
awesome.
seeing you. Thanks. All right. Bye.
See you next time.